This is episode 9, which in itself is quite an exciting feat. We're happy to be able to bring you this quality content for 9 weeks in a row. It's pretty awesome.
Yeah, it's
Um,
really amazing.
thank you for coming out. If it is your first time, welcome. I'll just introduce our co-host for today's video. So of course, as always, we're joined with Joe Bladdock, who is a mortgage professional located in the Simcoe area, but serving all of Ontario. Joe's been in the industry for over 10 years. He's got 2 kids. He has been he's the man if you're looking for some knowledge on mortgages. So again, it's always happy to have you here, Joe.
Thanks very much, Sam. I appreciate that wonderful introduction. It's always great to be introduced by you. Yes, and I do have 2 kids. They are really they have a lot of energy. They keep me going, and they give me a lot of drive to get up for every day. Yeah. And thanks for the great introduction. I'm really excited to have episode 9 air today. Really exciting episode planned for us. And Sam, I'll just introduce you back here. Sam Thompson is a mortgage agent here in Barrie, Simcoe County. He's been part of our team here for over a year, which is pretty fantastic. And he's been helping a lot with our first-time home buyers and even just like educating home buyers into what is available for them with grants and credits and rebates when they go to purchase their first home, which is really exciting. And Sam, it's good to have you on the show today. I know you're married, and it's just great to have you on the show today.
Yeah, thanks for the introduction, Joe. Again, I'm really happy to be here,
Yeah.
and we're happy that you guys can be here with us today as well. So, if you're watching the video, feel free to drop a comment, just saying hi. As you know, if you've seen the videos before, every comment and every share actually counts as an entry into a contest that we run each week. So that's a reminder that at the end of today's video, we will be doing a draw for a winner to win a $25 Skip the Dishes e-gift card to keep those ordering in takeout meals going. They've been keeping me pretty sane, being able to,
Yeah.
get to experience that during lockdown.
Yeah, absolutely. Like having food just like say on a Friday night just to celebrate the week,
Mm-hmm.
having a good week or whatever it is, something to just celebrate the week. Because during COVID and lockdown, it's hard to differentiate the weeks anymore. So, let's have
Mm-hmm.
this week we're ordering Chinese from DoorDash or Skip the Dishes.
Absolutely.
Yeah, so
Yes.
definitely, like Sam was saying, leave a comment or question or share. We'd love to get you a gift card on our draw next week.
Mm-hmm.
So yeah, so just I wanted to just break into some news first off, and I'm sure a lot of you are wondering about what's going on these days with mortgage rates. I know we've been talking a lot about that, Sam, haven't we?
Yes. Yeah, that seems to be the question on everyone's mind, especially now that, we are seeing rates go up a little bit. It's
Yeah.
becoming more concrete and it's adding a bit of fuel to the fire for that question.
It really is, yeah. And what's happening right now is the bond market has been rising, and the 5-year bond yield has been rising. Which, if any of you finance people know and love to track this online, if you watch the 5-year Canada bond yield and it rises dramatically, then chances are the fixed rates in Canada will go up because that's where the banks get their money from, and they
Mm,
need to make that percentage spread for their profit.
right.
So they've been spiking recently, and we've seen rates creep up. And
Mm-hmm.
there's a lot of buyers really panicking right now because, oh no, rates are going up. But the reality is, Sam, is that they've only gone up maybe 0.1 or 0.2%. And if you think you've missed the boat, you're not too late because not all lenders have raised their rates.
Mm, that's right.
So, I mean, it's a little bit, again, we're talking about sensationalist articles and just lighting a fire, like you're saying, under everything. But they've only gone up very slightly. And from what I've read, they're all saying that this is just a temporary bump. We'll see if
Mm,
this pans out, but right now fixed rates are still pretty low.
That's
So
right.
yeah, I don't know about you, Sam, but if I was in a higher fixed rate right now, I would still consider getting your mortgage switched to the low rates today.
Absolutely. And we're seeing a lot of people reaching out for that. And that's definitely been a big trend, especially going into the new year, that we've really been looking at is, over the last few weeks, going through the series of using the lower rate compared to the higher rate to
Yes,
actually switch you into, you know, same payments on a more expensive home, or keep your payments the same while consolidating, debts you may have acquired over the last couple of years.
absolutely. Yeah. So, just getting into that, I have a small presentation to share with everybody today that I'll go into to summarize exactly, Sam, what you're saying we've been chatting about for the last few weeks.
Hmm.
And then we'll conclude it with our special guest in a few moments here.
That's right.
All right, so let's look at the presentation. I'll just share the screen here. And if any of you can't see it, it should be here as well.
Looks good.
All right, so let's just look at that here. Okay, perfect. All right. So we've been chatting about how these mortgage rates and how these market values have impacted homeowners in Canada these last few weeks. And Sam and I have really gone into depth on some of these calculations. So what I wanted to do is just summarize some of the high level results that we've been able to figure out from the last few weeks.
Hmm.
One of the things we've realized is that if you got a mortgage 2 years ago in February 2019, you would have got a mortgage probably around 3.64%. That was the topping out of the 5-year fixed rate around that time. And we found out if you were to put that mortgage into a 164 rate today, that you would save approximately $456 a month,
Wow.
which is pretty substantial. I mean, that can go towards funding maybe a nice savings account, emergency fund, can go to fund, maybe a car payment because you need to replace a car.
Hmm.
I mean, the savings can just really mount out. It can help send your kids to maybe that program that you wanted to send them to, or allow you to pursue some extracurricular activities or some education of some kind, lots of things, right?
Hmm.
Just by changing your mortgage. The other thing we saw is you can actually increase your mortgage and pay approximately the same amount because you're paying a lower rate. Now, in this slide, I didn't put the amount because it's different for everybody, but approximately the amount that you can increase your mortgage by will be about between $50,000 to $100,000.
Wow.
Yeah. So just by increasing your mortgage and paying off some of your consumer debt, or
Hmm.
maybe paying off your car and eliminating that car payment, you're going to pay the same mortgage payment, but at the end of the day, also not have those other payments in tow, increasing your cash flow. And, you're taking advantage of those low rates to do that.
Right.
Yeah. So we've seen a lot of that, Sam, where people have rolled in some debts, or even say folks that are separating. We've seen a lot of that in 2020 and 2021, and they can roll in a spousal buyout and not have their mortgage payments increase very much at all.
That's right. And it's definitely something to say that it's worth the conversation with Joe, myself, or Terry Lynn in the office to see where you stand in terms of, any of the options we chatted about. If you're looking to, upgrade to your more forever home, or if you want to reconsolidate some debt that you've accrued over, the COVID season, or if there is spousal buyouts. There's been, quite a variety of what we've been able to use. Use that low rate for.
Exactly. And yeah, like you said, Sam, upsizing your home. This is the last slide before we head into our special guest. But this is the most massive one, right? When you upsize your home, the home that you bought in February of 2 years ago, 2019, for 550,000, you can turn around and with today's rates and today's market values, buy a $900,000 home and only be paying $46.91 more per month.
Wow.
Anyway, let's stop that there. I've talked enough. Let's get our special guest in here to chat a little bit about, you know, how to win really in today's market. Okay. Talked enough. Let's get our special guest in here. So as we get ready for our special guest to join us here, today we'll be talking a little bit about how to win in today's market with Kaleb Streeter. Kaleb Streeter is a real estate agent in the Aurelia market. He specializes in the Aurelia market locally, and he's part of a brokerage called Exit Realty, and they're located in Simcoe County. And he actually has won the top agent in Exit Realty for 2020, which is I'm really excited to have him here today, because he's going to give all you viewers today some real valuable knowledge on the market and how to win in today's market. So welcome, Kaleb Streeter. How are you today?
Yeah, thank you very much. If we could just do this whole thing over again, I'll never get tired of these introductions. So thank you kindly for that. That's cool that you saw the award. I wasn't sure you just came out of nowhere with that. So we're very proud. I run a small team, so I can't take 100% of the credit. I do have people behind the scenes that are, it's a real blessing to have, and that help us, you know, serve the marketplace in the capacity that we do. So a lot of the taxing part of the job, the administrative tasks and things like that are being taken care of in the back end, allow us just to serve our clients, where we can be in the field 95% of the week. So yeah, thanks for having me.
That's great. And I'm really glad to hear that, because, you know, a lot of the times clients need to see you and interact with you. So I'm really glad that those folks on your team are able to get you out front and dealing with the buyers personally, and making sure that you're finding them what they're looking for. And I wanted to ask you actually how that's all going right now with the market values the way they are. I know they're really high right now. There must be a lot of excited sellers out there.
So the answer is twofold, right? It is, I mean, clearly the market is on fire in terms of pricing. And it's a favorable thing to be a seller, but a lot of those sellers also have to rebuy. Mm-hmm. So it's kind of that old adage, right? It's 6 of one, half dozen of the other. Whether you sell high and buy high, or things plateau and you sell mediocre and you buy mediocre, or you're in a market that's favoring buyers and you sell low but you can buy low. If you're buying and selling in the exact same market, let's call it Simcoe County, and the exact same market conditions, so call it with inside of 90 days, then there's really not a lot difference. Your net proceeds will likely be the same, but it's you guys that really make the big difference right now. So you would say, okay, well then what is the point? What's the point of moving? If you could take advantage of a lower rate than you have, if you can take advantage of increasing your mortgage because your affordability went up because of the lower interest rates, and consolidating debts and paying off vehicles, then this is more of a financial move than an emotional move, or even a want or a desire. It's kind of retirement planning. It's wealth building, and real estate has been and will always be a great vehicle for that. So the real winners in today's market currently are people who are selling that don't have to rebuy. So an investor that perhaps has multiple properties, or someone who has a cottage that is willing to let it go, things like that, or are moving out of province, or have bought privately, downsizing, whatever. So there are some winners in this market. Now, I say that, but I also want to be careful, because if you are buying in today's market, there's a way to win. So I don't know what kind of time we have here, but I can go into some tips and tricks for buyers as well, and how to not get discouraged and win in today's market.
Mm-hmm. Yeah, that would be great, actually.
Okay.
All the information you're giving right now is very valuable. What you're saying right now, the fact that investors can offload properties right now if they don't need to hold on to them, or cottages if they don't need to hold on to them for profit, that could just like you're saying, be a great financial move for those folks.
Oh yeah, big time.
Yeah. But you're saying the other financial move is for those who aren't rebuying. So tell me a little bit about that before we head into talking about how to win in today's market, because I want to know more about that. For those who aren't rebuying, what would their strategy be right now? What would you think there?
Sorry, are rebuying, like people who have to buy as well?
Oh, who don't have to rebuy? Like
Oh, okay.
what fine is that?
Yeah, so I mean it's a sale only, and for
Yeah.
any real estate agent, it's the greatest feeling ever because there's no pressure. You can
Yes.
accommodate any closing, give or take, and you can be creative with your marketing. Again, not having to match up a purchase end to a sale. It's the chicken or the egg conversation. Do we buy first or do we sell and then buy? And there's pros and cons to either. But again, if you're
Yeah.
just selling, then you're really in the driver's seat and you can take advantage of the market. So it's kind of one of the areas that we've been focusing a lot on is that, okay, let's go and see who we worked with in the past that bought an investment property or, that maybe they're in their 50s and 60s. This would be a good time to cash out. Because if things did change and it took another 5-10 years to get back up to these levels, which I don't speculate, but let's just say it did, then maybe it's a good financial move to sell now. The other thing is if it was early or premature and things did plateau, it certainly makes it easier to rebuy.
Mhm.
And you can diversify your equity. So you don't have to use 100% of your proceeds to get back into the market. And you know how they say drive till you qualify. So as an investor, it doesn't really matter where you're buying as long as you can manage the property and if it's cash flowing, right, which is key. You could go as far north as you need to until the values start to drop.
Exactly.
And because of that, we're actually seeing a lot of traffic go Huntsville and north up to North Bay.
Yeah. I've heard a lot about North Bay right now. I've heard rents have gone up, some say as high as 20% in North Bay year over year, and that it's a really good opportunity to invest there. So yeah, it's interesting.
Agree.
Yeah, I'd love that you brought that up, Kaleb, because I've heard that too, and I have some family in North Bay, and that just it makes me happy for them because that's gonna do well for their properties up there.
Yeah, exactly.
Yeah, well, that's really good. But so those investors that are watching, or those folks that are watching that have a cottage property, definitely reach out to Kaleb. He can give you an idea as to what you're looking at with your sale and how he can creatively market your home to make sure that you get the highest amount when you're putting it on the market. But one thing I wanted to get into that you mentioned and that we briefly went over was how buyers can win today. And the questions I'm getting are, do I buy first? Do I sell first? You're probably getting that too. And Sam, you had a question there for Kaleb as well, kind of related to that.
Yeah, something that we've been getting a lot of questions specifically from buyers is what to expect from the list price versus the actual sale price. As we're seeing, they're going quite a bit over list price, just to give an expectation, because especially, new buyers are looking at, oh, that price range seems affordable, but then they have to be prepared for quite a substantial amount more.
Yes. Well, that's a valid point, and the answer is not straightforward because there isn't a lot of logic to the end results.
Okay.
It makes it difficult for realtors as well because even when we're listing properties, we really can't accurately predict sales price like we once used to. And so for buyers, it's even harder. I don't like the term bidding wars personally, because to me, bidding it implies that you are going in order up and up and up, and you would know what the previous bid was. But since you have no knowledge of the offers, you're not really bidding. It's a highest and best scenario. What are you most comfortable with? But the key in this market to the sale price to the list price and those ratios right now is working with a realtor who has access to the local stats. So because if you win in a multiple offers situation, you will never know if you won by a lot or by barely.
Yeah.
You don't know the details of the previous offers. So have you over leveraged? Have you paid $50,000 more than you would have needed to? Was the second best offer $50,000 less than yours? And as a representative of sellers, that happens all the time. Mm-hmm. Normally, there's one outlier that is far and above everybody else, and there's no competition. But how do you close that gap? how could that buyer have still gotten that property but not have had to pay that much without the knowledge of what the other offers are? And the key is this. You normally see that when you're being represented by an out-of-town agent who doesn't have access to the stats of the local board. So I'm not pushing, use a local realtor and all that. I get there's major advantages to it. Just like we don't sell in Toronto because for the same reasons, I mean, we are Toronto board members, but for the same reasons, we don't understand their market like we understand ours. So with knowledge, representing the selling side and then also statistics, we can say, hey, working with a buyer, this street, here's the list to sale ratio. So what that is basically the sale price in relation to its asking price. And then we put it into a percent. So, if a home lists for 500 and sells for 500, that's a 100% list to sale ratio.
Okay.
And with that, or a 1 list to sale ratio, with that, we can say, hey, it's 105% or 110% is the average. And this same model sold for X and it listed for X. And then you can boil it down. And then you could really get fairly accurate with that, because those same statistics is what the seller's agent used to price the house and to direct their seller on what to expect. So they already have a number in mind. If we list for 550, we're hoping for 7. And that's an in-town, or really that's a realistic expectation. If you see a 549.9 list price and you don't have a 7 in front of your offer, extremely unlikely you'll be considered. So, but do you have to go to 750? Do you have to go to 725, or will 7 on the button get it? And that's, again, we're having somebody who can just log in, look at the facts and say, hey, and then skillfully decide whether or not, 2 offers is going to push the price that high, or 12 offers and things like that. So we tend to get pretty close to competing offers. And if we're the winners, we're not winning by a ton, which is really a good thing for buyers. But without rambling on, the tips for buyers in today's market. So firstly, pick a local realtor to represent you on the purchase end. It's okay to have somebody represent your sale and somebody else represent your purchase. You want to double dip. You want the best in each market. And it doesn't normally mean it's the same realtor, especially if you're coming from out of town. Number 2 is there's more than just price that is attractive to a seller, right? So there's 5 main components to any offer, and you have purchase price, deposit amount, closing date, inclusions, exclusions, and conditions. So of all 6 pages, really the seller is just looking at those 5 main components. So if you take the price out of it, that's only 20% of really what the seller's looking at. Although it's weighted differently, but that's just 1/5 of the offer. So then if you start going down the list, it's like, okay, well, what can I do? Well, what's next? Deposit. Okay, great. If you are capable, if you have liquid, putting the highest possible deposit on your offer will do you wonders, because it shows financial strength.
It does.
Although it's not actually the case, 9 times out of 10, people believe that if you walk from an offer or from a firm deal or whatever the case is, if you fail to close, that deposit gets forfeited to the seller. Now, by court order, it normally ends up that way. It's not actually, doesn't just automatically get forfeited. But if that's the decision from the lawyers, then a healthy deposit makes the sellers feel very comfortable. Almost, they want you not to close.
Exactly.
So they can go back to market. And as long as the market conditions are still the same. So as high as possible, as comfortable as possible, as a buyer, you should be putting the most amount in your offer. It comes off of your down payment anyways. If you're putting 100,000 down and you have 50,000 liquid, then put it down. Because price aside, that's going to put your offer right near the top. So if you're a first-time home buyer and you're not borrowing from an RRSP, if you're not getting a gift from parents, you have some liquid that you're using as your down payment, use it as your deposit, and make your offer as attractive as possible. And then from there, you just can go down the list. And the last one really, I mean, conditions is one thing right now. We're not seeing offers with conditions very often, but don't step outside your comfort zone to buy a place without financing, or especially if you're going really high, it would be nice to get an appraisal on the property still, but and a condition to back out if you couldn't. But Closing date is the last tip that I'll give you there for buyers, and that's really to let the sellers pick the closing date. So what I mean by that is if you've sold and you have a date in mind that you need to match, of course you got to stick with that. But if you have flexibility, or you're a first timer, or you can accommodate any closing, give the seller what they want. So they're going to look on that very first page of an offer. Really nothing else matters. They're going to see purchase price, deposit, closing date. Okay, the closing's exactly what I want. The deposit's very healthy. So if they feel like you've got everything dialed but price, then it makes for a very quick and easy verbal sign back, or a written sign back, or perhaps the price is already healthy enough that you just get a straight acceptance. And that's how you should strategize and build your offers, as if you were the seller. What does the seller want? And I'll put that on paper. And that's how you get a house in today's market. That's how you win in competing offers.
That's awesome, Kaleb. That is fantastic. And I love how you said in there that, you know, be comfortable with the price going into it and just knowing all that. Also using a local agent so you can actually look into how much you won by, how much you lost by, that kind of thing. Because like you're saying, that's really important. And the Aurelia Simcoe area, completely different board than the Toronto board. So a Toronto agent will not have any of that, or an outside agent from any other area will not have any of that. You have that specific information. You can get that to your buyers so they are feeling comfortable with everything. You can probably look up other houses too and show them list prices and sale prices and give them an idea of what is expected in the market and all that too.
Yeah, well said.
Yeah. But going back to what you're saying about, you know, just being comfortable and all that, I noticed that buyers that bought for $550 in February of 2019 can pre-approve now for $900,000 today, based on an average sale price because of the equity and interest rate situation. So if you're looking to buy at a $900,000 home, it's almost as if they need to be looking at a home that's priced between, maybe, if I'm getting this correctly, $750,000 to $800,000, and then be prepared to go up to the full 900. Is that about right?
Yeah, I would say that's accurate for sure.
Okay.
And again, when I say illogical, we don't really know. You know, we have seen some homes recently list and hold offers and be accurately priced, and then the presentation date comes and goes without any offers.
Yep.
And we're talking 35 plus showings and no offers. So what's happening? Well, we do find that some crazy sale prices can be discouraging for neighborhood sales, and people will look and say, oh, the neighbor sold for X. Not comfortable going up to X. So we're not going to offer on this property. Lots of interested people, but they don't want to put in an offer 150 to 200,000 over asking price. They're going to continue their hunt. So there's some Easter eggs out there to find. That's for sure.
That's
and again,
yeah.
If you're not paired up with, you know, if you're buying in Hamilton, get a Hamilton expert. If you're buying in Kawartha Lakes, somebody in Kawartha Lakes that's on that board, get a Kawartha Lakes expert. So it's there's so many ways to win in this market and not get discouraged, but booking every showing with the listing agent is not a way to get ahead of the game.
Okay, that's right. So if anyone is looking, that's watching this video, either live or later on, Kaleb Streeter, he's with Exit Realty, and he works in Simcoe County, primarily Aurelia market. But Kaleb, how can people get in touch with you right now, folks from Toronto or anywhere that are looking to move here? How can they get in touch with you to get things started?
Yeah, likely the easiest way is just to visit our website and fill out our contact us form, or you'll see all of our information there.
Perfect.
Which is streeterteam.ca.
Perfect. Streeterteam.ca.
Streeterteam.ca is the best. And you can send us an email. You can call my cell directly. All our information is online there.
Perfect. Kaleb, thanks so much for joining us today. I appreciate you coming on and giving us some expert opinions, some advice, and all the viewers today as to what they can expect in today's market. And if they're looking in Aurelia, how to contact you. It's been really great having you on today.
As always, I appreciate it. So thank you for having me, and enjoy the rest of your week, boys.
All right. Thanks there, Kaleb. You too.
Take care.
All right. Talk to you later. All right. Thanks very much for joining us, Kaleb. That was wonderful. And just to have a local expert from the Aurelia area talk a little bit about what to expect in this market, it's just really invaluable. Kaleb works in the Aurelia market. He's on the streets every day. Get in touch with him at streeterteam.ca. So moving on, Sam, we have a contest.
We do. So again, as we do each week, at the end of each video, we ask Joe to bring out his snare. We do a awesome drum roll and pick a name from people who have commented or shared the video. So again, this is another opportunity for you to join. If you have any questions for myself, Joe, Terry Lynn, or even Kaleb, and even just want to connect or have any questions, please write those in the comment section. We will get those through to Kaleb, or we will get back to you in next week's video. But as for now, I think we're ready to draw from last week's comments and shares. If Joe, you're ready on your end.
All right, I am ready here. And today, I just wanted to tell everyone, in case they're wondering, I changed the sound of my snare a little bit. I put a I guess it's called an ambassador head on here, and took off my other Evans head. I can't remember what it was called, just to get a different sound. So if any one of you have any comments, I would love to hear about that. All right, so here's a drum roll. All right, all of you guys heard that, but who's the winner?
Today's winner is actually Alex McCoolson.
All right, congratulations, Alex. Way to win your card, and we'll get in touch with you this week to get that out to you. And as a reminder, as Sam always does, questions in the comments below. If you have any questions for Sam, myself, or Kaleb this week, all questions, comments, and shares will be entered into a draw for next week between now and Tuesday of next week. So please join us next week on Canadian Mortgage Weekly. And Sam, we'll have you there as well.
Video 10, looking forward to it.
Yeah, episode 10. We might do something special, and we're looking forward to seeing you all there.